What's up everyone, Brad here with the Money Dad channel. In this video I want to talk about a stock called Academy Sports and Outdoors Incorporated. The stock ticker is ASO. And the reason I want to talk about this is because I'm very bullish on this stock. There is a chart pattern on the screen right here. If you're looking at the screen, you're a long-time subscriber, you might already see the chart pattern. I haven't drawn out any lines yet, but you could probably already tell just by looking at it if you've been following along for a little while. But that's actually not the point of this video. There is a nice chart pattern on this chart, but there is a much bigger deal going on here with ASO, and I want to get into that mainly in this video. So I found this stock because I was looking at the short interest on a different stock, and I was looking at leaderboards, kind of the list of the most heavily shorted stocks in the stock market, and I was looking for a different stock. And actually, that's a separate story. I actually found out that stock was not very shorted all that much, but that got me onto this list of heavily shorted stocks. And I started looking at them. I started thinking, what's the next short squeeze going to be? Where GameStop, for example, went from $5 a share a year ago to upwards of $400 just a few months ago, and AMC and Nokia and things like that. I see Academy Sports near the top of this heavily shorted leaderboard. Let me just pull it up. And I start looking into these companies because I want to find something that is a good company that's heavily shorted, right? So I see Academy Sports here at the top of this list, for example, 47% short. Not quite at the top of some other lists. Not all these lists are perfect or up to date or accurate, but I do, I have my account at E-Trade, so I pull up ASO in E-Trade, and sure enough, they say 47.78% short interest as a percentage of the float. So that is extreme. Now this list right here, a different list other than this one, right? So highshortinterest.com has Academy Sports as the top short interest company. This list right here, all market caps, so every single stock that's traded in the United States, right? That's not over the counter. So if we sort by percent of the float, we get ASO right here, 48.8%. It's pretty close to what E-Trade was saying, pretty close to what high short interest stocks or highshortinterest.com is saying, and it's way up there, right? 1, 2, 3, 4, 5, 6. This sixth highest short interest as a percent of the float in the stock market right now. So why am I talking about this one and not all these other ones? Well, because I did some research. I'm jumping into the financials, looking at why this company is so heavily shorted, and when I see this, it makes sense to me. I see Academy Sports and Outdoors and I think, oh, that's that brick and mortar retail store that sells, sporting goods. It's like, okay, that makes sense. Brick and mortar stores are kind of, they are the past. Everything is online nowadays, right? So it makes sense that they're kind of going out of business. That's why GameStop was heavily shorted. They're looking to go out of business. Their brick and mortar retail stores are not doing well. Everything is online these days. So it makes sense that ASO would also not be doing well. So I'm looking into this stock. First of all, I see this nice chart pattern right here. This chart long term looks very good. They just went public in October, the beginning of October, and they've just gone straight up since then. And you've got this bull pennant right here, right? So the chart looks great. Looks like this is about to break out to the upside. But that's not the point here. Even though this is a channel where we talk about chart patterns predominantly, this video is about short interest and the fundamentals, the financials of a company that are behind this heavily shorted stock. Because Academy Sports, the financials, the fundamentals look totally fine. They do not look like a GameStop or an AMC or a Nokia. Look at these. Look at this snapshot right here of their income statement over the last 4 years. These big blue bars right here, that's their revenue. In 2017, they did 4.8 billion in revenue with a positive profit margin, barely a profit at all, but positive, right? So net income of 58 million, so it's positive profit. 2018, 4.8 billion revenue. 2019, 4.8 billion revenue. 2020, 5.7 billion in revenue with a 5% profit margin. So for 3 years, they kind of stayed the same in that 4.8 billion range in revenue. 2020, they took it a step further, took it a step up, did even better, right? The profit margin got better, the revenue got better. I mean, this is a good, from a financials perspective, this balance sheet, this income statement, rather, looks good, okay? This does not warrant being heavily shorted. Yeah, the profit margin isn't fantastic at 5% in 2020, but this is a brick and mortar retail store that is growing, not declining in revenue. They're not shutting doors, right? Let's look at their assets. The balance sheet. In 2017, the balance sheet was $3 billion in assets. In 2009, I think there's an issue because they got 4 years listed down here, but only 3 years of data. So I'm guessing this is 2020. But either way, so 2020, 2019, 2018. So this is probably 2018 right here. $3 billion in assets. 2019, $4 billion in assets. 2020, $4 billion in assets. They did grow their assets ever so slightly year over year here from 4.33 to 4.38. But they're moving in the right direction. If at the very worst, they're staying stagnant with their assets, their size, the amount of stores they have, while growing revenue. So they're doing better with their current stores. This does not make sense to be this heavily shorted, in my opinion. When you look at stocks that are heavily shorted, you think they're going out of business. You should be able to see that in the financials, in the fundamentals. Look at GameStop, for example. I'll pull up the same exact data on GameStop. The stock that went from $5 to $400 because it was short squeezed. Look at this snapshot right here of their income statement. 2017, $8 billion in revenue, or 8.55. 2018, 8.3. 2019, 6.5. 2020, 5. It's clearly sloping down with negative profit margins, right? They did better in Q4 of 2020, but they didn't announce those results until after the short squeeze. So that's the reason why this stock was so heavily shorted. And look at what happened there with that short squeeze. That's insane that heavy of a short squeeze happened with a stock that has been doing poor. The company has been doing poorly. And we're looking at Academy Sports where the company is doing even better. It doesn't warrant a short interest of this high. But here we are with a 48% short interest as a percentage of the floated shares. Let's look at AMC. Pull them up. Look at this snapshot of their income statement. Right? They were doing fine in 2017, 2018, 2019, and then took a giant dump in 2020 because of the pandemic. They had to they had no revenue. They had barely any revenue. They lost a ton of money. Their profit margin was abysmal. So this is a real reason why to short a stock if you were in that game, if you like to short stocks, right? Companies that are doing poorly, it makes sense to short them. ASO is not a company that is doing poorly. This company, according to the financials, the fundamentals, in my opinion, look fine for a brick and mortar retail store. I just don't understand it. So you've got that. You got the high interest, the high short interest, which, if they get squeezed, this stock could shoot to the moon, right? Just like GameStop, AMC, Nokia, things like that. But then you also got this nice chart pattern here showing up on their chart, this nice bull pennant, which is indicating very soon there should be a pop in price as well. When I put those two things together, that got my money into this company real quick. I bought this company 2 days ago. I told my channel members, hey, I'm buying this stock. I will put a video out on it soon, and here's why. So that's what I've got for this video, guys. I hope you enjoyed it. Long story short, I am in ASO now, Academy Sports. I'm very bullish on this company because it is a heavily shorted brick and mortar retail company that according to the fundamentals and financials just doesn't make sense. The fundamentals and financials look totally fine, even good for a brick and mortar retail store. And two, there's a bull pennant on this chart that looks really bullish, hence the name bull pennant, right? So that's what I got, guys. Hope you enjoyed it. Let me know what you think. If you have your own opinion on ASO, leave it down in the comments below. I'd love to get some other perspectives on this. Hit the like button. If you're still watching this video, then you enjoyed it, right? So hit that like button for me. Subscribe to the channel if you're not a subscriber yet. We do stock chart pattern analysis usually on this channel. This one got a little bit more into the fundamentals and financials and short interest stuff because I just thought it was really important to talk about that on this particular stock, but typically we like to do stock chart pattern analysis on this channel. So come along for the ride on this channel if that's something that interests you. You can also join the channel, become a member if you want to support me, my family, and the channel by hitting that join button. Excuse me. It's $2.99 a month right now, and you get to see my buys and sells in real time. I post them to YouTube community posts to my channel members if that's something that interests you. Okay, that's all I got for this video, guys. I hope you enjoyed it. I will see you all in the next one.